Maverick traders, welcome out to your market roundup for January 10th, 2023. Corey here with you. Let's jump into it and take a look at the markets today. So pretty nice trading in the markets today, about 1% gains across the board, 0.7 in the S&P, 0.85 in the NASDAQ, 1.5 in the Russell 2000. So the small caps outperformed. Commodities were flat, oil and gold flat. Advanced decline line, about 71% of stocks advancing. And notice the 50-period moving average. We firmly are above that across most stocks, and that's been the case for about a week now. Even though the S&P just went above the 50-day today, we've already been well above 50% of stocks above the 50 for a while, and that speaks to what's really weighing the market down has been mega cap tech. And as long as you've been avoiding Apple and Google and Amazon, the majority of stocks are going up. The majority of sectors are doing okay. So that's kind of where the weakness has been. On the daily news, Powell says he may have to make some unpopular decisions. And what they're basically speaking to is that the biggest risk is sustained inflation, and that is the monster that they're going to battle against. So they may have to make some unpopular decisions, which creates some economic turmoil, slows the economy, do some things to just get their arms around inflation. And then Microsoft is weighing a $10 billion stake in ChatGPT. This is pretty amazing AI technology. I've been playing around with it. You can punch in about anything you want information on, and it will give it to you. You can tell it to write things, and obviously schools are worried about that because there's can be a lot of cheating that can take place where students basically put in what they want and it spits it out and they don't have to do any thinking on their own. It really is a competitor to Google. For the longest time, for many years, when we want information, we go to Google. Now ChatGPT is a real competitor and pretty impressive technology. Now let's take a look at the markets. The S&P 500, we've touched on the fact that we're in a sustained downtrend. That's not debatable. I mean, we're still below this downtrend line, which has been in effect for quite some time. And when we initially came up to that trend line, I personally got bearish. It was perfect. We crossed above the 200 as kind of a fake out move. And this was the big exhaustion day. This was just a perfect signal in my mind that we were at the end of the race. This was kind of where the race began, this exhaustion reversal down here, and then the race finished here. Now, when we got down here, I really did have a change of opinion and a change of analysis. There were quite a few factors that played a role. The technicals, a little bit. This was a Fibonacci retracement. We had already done 5 waves to the downside. So, this is an A, B, C style correction is the way that I saw it. So technicals, the chart did play a role, but also sentiment-wise, just people so negative, so pessimistic, extreme put buying. The average investor, we're seeing record-breaking numbers of the average investor selling stocks, and usually that is more of a buy signal than a sell signal. So all these factors kind of in play that make me think and have made me think we're going higher, right? And so I've laid that out for the past few weeks in the market roundup. Now look, we're up a few percent from there. It's been choppy, but we're still making our way higher. I still lean towards thinking we're going up and temporarily through that downtrend line. That would be the max pain point. That would really confuse and confound people. I think we can trigger a lot of stops up there. And frankly, it's probably a sucker's rally because ultimately I am more negative on the markets big picture. If you tell me, give it my best guesstimate as to where the market's going to be year to date, I'm going to say, well, we go down by the time we're looking at this in the rearview mirror on December 31st. I expect the markets have had kind of a rough time, but I'm optimistic first before that pessimism. We touched on this a little bit in the year-end review video in class that we did last night, where we gave our yearly outlooks. And again, while in the short term, I've been expecting and still expect more upside, on a longer term scale, by the end of this year, I would anticipate we have gone down towards lower prices. Now, the NASDAQ, I'm not so sure it will, in fact, get all the way through that trend line. It would not surprise me if this continues to be the underperformer and never does pierce that trend line. So the trend line piercing thesis is more related to the S&P 500, not the NASDAQ, but so far so good. If you've kind of been following along, markets are not zooming higher in dramatic fashion, but they're certainly continue to grind their way to the upside. There is a saying, you don't short a dull market, and this has been a pretty dull market. Now, as we look at price performance, a little bit of a mixed bag. In the consumer defensive area, you have more red, certainly. Um, as you look across the board, it's kind of hit or miss. Healthcare, some red here in the healthcare plans, but bright green in the diagnostic and research. Amazon with an exceptional day, Apple, Microsoft, Google, all pretty much sideways. So financials a little bit green, and financials come into play because they are going right into earnings this week. So expect some volatility out of the financial sector. So my outlook, now we're above the 20, we're above the 50. I remain short-term bullish. I still think that nice trade is a move up above that trend line, and that's where I continue to look for things to go, and so I'm trading that way accordingly. So far, so good. Let's look at some potential ideas on the bullish and the bearish side of things. If you want to be in tech, I think you've got to look at these old school tech names like Cisco. Cisco is, it's, kind of best days are behind it, but look, you have a key resistance, everybody sees it, there's a huge plummet away from it, you use all of this energy just to get back, we initially fail, and now we're coming back again. This is usually where we at least temporarily break out to the upside, kind of a cup and handle pattern. I like Cisco or Oracle or some of these older tech names. Not, these are old when compared to Apple and Google and so on. These were kind of the high flyers in 2000, even before Google had gone public, before Apple had really hit its stride and so forth. These were the big names back in those days. Huntsman Chemical. So again, kind of similar price action where we're currently responding to this key level, and I would expect it to back and feel, and I'd be more apt to buy on the pullback. So think about where it might pull back to, and more likely to be a buyer around that level. But do I ultimately think we're going to bounce and there's probably a nice buy the dip opportunity here? Sure. When you zoom higher on increased volume, that first little pullback and that buying opportunity is often a good one, right? It leads to more, where there's smoke, there's fire. It leads to more buyers coming in. It's probably not done. I don't see any major signs of exhaustion or anything. It's just kind of running higher, should pull back a bit towards 29 and change, and that's where we might look to be a buyer. And then Ryder, this one doesn't look as clean because we were kind of below the moving averages, but actually if you look at it on a weekly chart, it's pretty interesting. And if you look at it on the daily chart, all we're really doing is kind of squishing into support. And I always think of support not like it's a really solid surface, more like it's a trampoline. It's not uncommon that you kind of come down and temporarily squish into, that's kind of the little fake out, and then it springs you upward. And I would expect letter R to continue to work its way higher, and maybe that big whole round number comes into play later this year. So those are some of the kind of favorite names that I have. Now on the bearish list, these would be things that can trade lower and may in fact continue to trade lower. So just as we looked at Huntsman, which had kind of zoomed higher and might be pulling back, this one has zoomed lower on increased volume. You get rallies here, and there's probably at least another little trade. Here's the mistake a lot of people make. Do not think that the next sell-off will be anything close to this big. This was a huge sell-off. The next one should go back more towards normal. So you get a little rally that you short into. If you get 4 or 5, point drop, don't expect a 20-point drop or a 15-point drop like this recent one. Be more realistic. It should trade lower, but within reason. This next drop should not have the same magnitude as the prior one in most cases. So be realistic with your expectation. A move down towards, from the high 80s down towards the mid to lower 80s would be kind of the idea there. Mosaic, huge bearish engulfing formation where the bearish candle not only engulfed and swallowed up today or yesterday's price action, but the day before that. So we swallowed up the prior 2 days. Huge reversal. Expect a little sideways candle tomorrow with a little bit of price overlap. This price action overlapping with today. Maybe you can get up close to 46 or so, but I think you want to continue to play this to the downside. And ultimately, looks like a big inverse cup and handle in Mosaic. So MOS to the downside, one of my preferred names. And then last but not least, Microsoft. We talked about it. It's in the news. These mega cap tech names continue to trade poorly, just trading down here close to the lows, not really participating with the markets. Now, I do have to say, if the markets push higher as expected, you probably push a bit higher here in Microsoft into this gap area. So depends on your outlook. If you're quite bearish on the markets right here, right now, if you think CPI, which is going to be important on Thursday and such, really derails the market, maybe we just fall apart right now. I would expect a little more upside, but you want to get short there at a little bit higher prices. So markets are still in a bear market big picture, but we've been talking about this ABC correction, this move above the downtrend line. I continue to stick with that theme. It's working. If it ain't broke, don't fix it, sort of idea. Economic reports, the last 5 or so CPI reports have seen a lot of volatility, 1 to 2% moves in the S&P. So I'm not so sure Thursday's going to be any different. The expectation is for exactly 0% month over month inflation, which should cause the year over year number to fall because we're getting rid of a higher inflation number and adding 0, assuming that comes in as expected. Now, if it comes in 0.1 or something, that's not the end of the world, but there will still be a volatile reaction in all likelihood, 1+% in the S&P on that on Thursday morning, so be prepared. We're going right into earnings season. Bank of America, Citi, Delta Airlines, JP Morgan. Notice BAC, Citi, JP Morgan, Wells Fargo, big money center banks. KB Homes, Taiwan Semi, United Health. So quite a few reports. And then next week, loaded with earnings reports. And for the next few weeks, it's big time moving into earnings season. Hope you enjoyed the market roundup. Be prepared for the CPI on Thursday and have a great rest of your day. We'll see you next time. Goodbye, everyone.